Good afternoon. My name is Scott Redler, Chief Strategic Officer at T3Live.com. Welcome to today's recap and look ahead. What is today? Today is Tuesday. Wow, feels like a Wednesday, but I guess it's a Tuesday. With that said, markets rallied. Yesterday we came in the morning. Markets held where they had to, closed strong. Today we gapped up, had one of those gap and goes. I think there were a lot of clues yesterday to position for today. If you did so, you made a decent amount of money. I know the virtual trading floor was on a ton of trades. Just got to laugh a little bit. If you watched, I ran over to Fox Business and did a 310 hit, and was watching just some of the I'm so happy we have this show. In the morning for the morning call for the recap, because we technically and tactically go over so many different charts, so many different money making opportunities, and I feel like we talked on that show for about 5 minutes of just how happy they were that the Dow is positive on the year. How does that make you money? What is the big deal? It's really how you played the range up until we've crossed this level 15 different times. I guess if you're an investor and you just close your eyes and you put money in every month and you're doing that the next 20 years, congratulations, you're a macro investor and that's great. If you want to find key stocks that could provide alpha and then you can make cash flow with, you should be watching the morning call, reading my note, and you're already looking at the recap. But anyway, you look at the SPX, let's go right to it. Last week we wanted to figure out would Santa Claus come, and PS, this 2000 area held. You had a quick move up right into resistance, and then we talked about if there was going to be any commitment to the Santa Claus move, we should hold higher, and that's what happened yesterday. So yesterday we gapped down, if you look here really close, and we held, reversed up, gapped up today, and now we took out this small trend line right here. Okay, so that is one minor trend line that tactically was a good one to look at, because once it crossed above this prior pivot, it had another squeeze. So Santa Claus move, a little digestion, continuation. We haven't seen stuff like this in a while. Usually it's, stair step up, boom. This one, big day, you think you're going to hold in there, boom. So kind of nice to see that you actually had something that made sense where you had an up move, little sideways continuation, and now I guess we'll see what happens tomorrow. At the next real level, if you want to draw another line, comes up into here if they want to push it a little bit more into the end of the year. But we shall see. Yesterday, what we spoke about and concentrated on were really Google and Amazon. Google was on the front cover of Barron's, and I talked about the nice pattern there, that it was tight, and you could potentially get a day one in the morning call. Then we went over it on the recap. Then today, you had your day two. This 2-day move was something we've tried to catch so many times this year that was so elusive. And then today, while everyone's on vacation, isn't it cute that it triggered above this little wedge pattern? In my note, I wrote about this pivot right here. That was your entry. And then, boom, there was your follow through above the highs of the year. Okay, I did write about that in my 2016 thesis. I posted the chart because it was already happening. Anyway, this is best in breed, and we'll see what's next. At this point, 2-day move, hard to take home a lot long. If you're still in it, congratulations. I was in it yesterday and sold it, probably too close to the open, but it still looks good. Amazon, same thing. Amazon woke up yesterday, was very tight, went over this pattern with you guys in yesterday's recap, and the morning call, talked about if they want to get this thing going, that you have this nice triangle pattern, and once it ignites with your day one, you're always in the mood for a day two. And the first time in a while, you actually had it here. Okay, lots of different times. It looked like it was going to go here, it didn't. Fell apart. Looked like it was going to go here, didn't. First time when nobody was looking, it did it, and if you stayed with it, congratulations. It's now above the highs of the year. If you took some home long, yes, you could get a day three. I would not be shorting this thing yet to give you no opportunity to do so. Moving averages just curled up. It still looks really good. This morning I posted a chart of Facebook. Facebook, in my opinion, also one of the best in breed status. It's giving you many different trades all year long. It loves to consolidate, then it loves to break out. Here was the last time I consolidated before breaking out. This time, first I went over this spot to be a buyer, and then, said if it can get above this, that would be your next constructive spot to get back to highs. At this point, I do have some overnight. I have less on today overnight than I had yesterday. This was when I saw it perk up. I added in the first half an hour, and now I'm going home with a little less. I still think this is something that could work its way back to the highs of the year, either in the next few sessions or maybe in January, best in breed above the moving averages. In big cap tech, Microsoft, more like you got to buy the dips versus buy strength here. Did I punch in Microsoft the right way? Let me see. Might have missed it. On this, in my note today, talked about this being one of the mega caps that could probably make new highs into 2016, and basically it already did. So a lot of the things that I was thinking about into the new year started to happen prior. Okay, that's the way it happens. Strong stocks typically get stronger. This still looks like it could head higher. Apple gave a quick move today. I don't know if it's going to continue. It's still weaker than every other name that I just went over. Okay, but some say that this was like a retest here. So if you're in it, okay, we'll see what happens. Maybe there's a move back to this 21-day moving average, which it's been below now for over a month. So if you're in some, all right, see maybe you get a little extra move here into either the end of the year, maybe the beginning of the year. Funds have to put money there, but all in all, a broken name for now. Needs a lot of work. This is when hopefully you broke or got out of it, and now it looks like they want to push up the S&P. Maybe they can push this up a little bit more. You take a closer look here, you will see this pivot right now is like 109.40, and the next resistance comes in closer to about 110 to 111. So if you want to be a surgeon, maybe there's a spot there. But this is a laggard, not like Amazon, Google, Facebook, and all the other ones I showed you, and even Microsoft. Tesla, very interesting. First time I played it in a while. It's also hasn't been the best name as of late. Got very tight here, pulled in. Okay, gave a nice bull flag type pattern. I did get long it earlier in the session today. They saw me on the VTF, and now it seems like it, might want to clear a level and give you maybe. It looks like there's another 4 or 5 points if it wants it. Lots of times it doesn't give you follow through, but on a day like this, I tend to think you could take home long still because it is heavily shorted, and if it pushes through here, you get another move. So Tesla looks pretty interesting. Oil, we talked about it having to hold higher, and it did. So we'll see if that continues heading into the end of the year. Can they continue the dash for trash? And at this point, here as you move off the lows, it did hold higher, and now this is your next spot there. So we'll see if it could get above this and retest the 21-day. It hasn't been above the 21-day in a long time. Still just an oversold bounce type scenario. XLE, opened up and didn't close real well. We'll see if it, plays a little catch up tomorrow or not. I was in it and I still am in it. My stop will be here, and that is below yesterday's low of 60.50. If it wants to continue, at some point maybe this is an inverse head and shoulders pattern with the left shoulder, the head, the right shoulder, and it could get above this to continue. So in closing, they went after a little beaten down, stocks, not as much as they did last week, and they also, which was better, they took the strong names that have been tight, that have been in strong trends all year, and you had 2 nice new high trades. They woke up yesterday, continued today, so that's all you could ask for as a trader, is some continuity. Yesterday, markets held higher, held a big portion of last week's Santa Claus move to give clues that we can continue for a markup, and that's what took place versus a misdirection craziness. And now we'll see what we have in store for us the next 2 days. In my humble opinion, I think the meat of this week's move just happened, and now maybe you could find a little bit more in stocks. But as far as indices, there might be a little left, but I wouldn't be just going all in indices now because you're playing for a last-minute dressing into Thursday's close. But it seems like we're setting up for a better start to January than not. But we're going to need more participation from some of the laggard sectors and need more leaders to come into fruition before we can get a sustained move above 2100 and higher into the first quarter, which at this point it seems like where it's more in favor of versus not. But we'll see what happens over the next 2 days. Have a great night. See you tomorrow.